Hello and welcome to the weekly wrap video, where the highlights this week has come from a number of central bank decisions, including the ECB, the PBOC and the RBA, and then on Friday we had that non-farm payrolls report. So I'll take you through the central banks first. So it started last weekend where the PBOC again cut rates in a surprise announcement. However, this didn't have too much of a market impact on the Monday, although equity markets did finish slightly higher. There was also a surprise rate cut during the week from the RBI over in India in relation to the latest budget. Then we moved on, we had both the RBA and the Bank of Canada rate decisions, where both the central banks stood pat after cutting rates the previous month. Some had expected them to cut again due to the sliding commodity prices. However, as mentioned, both of those kept their rates unchanged. And then on Thursday we moved on to the Bank of England. They were also unchanged, but the highlight was the ECB, where the ECB President Draghi announced more details of that QE programme, and there was also the staff projections from the ECB. So they said they still don't see inflation at their 2% target even by 2017. So that prompted some to expect a more accommodative policy for longer, going past that September 26th timeline that the ECB have set for their QE programme. So as such, that led to weakness in the euro, with euro dollar touching its lowest level in around 11 and a half years. So alongside that, the ECB President Draghi also said that the ECB would be buying bonds up to the deposit rate, which is minus 0.2%. So that led to heavy buying in bunds, as the yield is still well above that level, and that shows that the bund could be bought by the ECB up until the yield hits minus 0.2%. Then finally I'll move on to Friday. Although there was no major central bank decisions, the highlight was that non-farm payrolls report, which again was a stellar report. Non-farm payrolls coming in at 295,000, and that has brought forward some expectations of a rate hike from the Fed, with June looking increasingly likely. There's been comments from Fed's lacquer post the report who suggest it would be time to start hiking in June. So anyway, that's all from me. Thank you very much for watching, and I hope you have a great day.